Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Tsang, Chairman of Tsangs Group, an innovation-focused global family office that bridges East and West. Their mission is to invest in global opportunities that allow them to exert positive influence and drive positive impact in Hong Kong, Asia, and beyond. Patrick, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. Thanks for having me.
You describe your investment strategy as location and sector agnostic. What do you mean by that?
We believe that disruptive innovation can come from anywhere and anyone. So we always look for trends for the latest change makers, technologists, entrepreneurs who have the vision and the grit and resilience to change things. So we're always on the lookout for the next guys to change the world. So that's why we're looking at opportunities from all over the world, from any sector and anywhere.
Give us an example of a recent investment.
Recently, we invested in a company in the US, actually in Texas, a company called Ad Astra, which has a rocket propulsion engine tech. It's started by a fine gentleman called Dr. Franklin D.S. Tsang. He's been to space over 7 times, worked in NASA for over 30 years. The reason why we're into space, even though we're just a family office, is that we believe that the technology in space could have uses on Earth later on with all the energy efficiency. So right now, the tech to Mars, the journey from Earth to Mars is about 9 months. These guys can do it just over in 3 months' time. So the shortening the time, this will help to make the costs of repairing satellites and all kinds of like space missions will be much cheaper. And hopefully we can bring this technology to Earth and help save problems such as climate change.
TG Venture Acquisition Corp listed via SPAC on Nasdaq in November 2021. Tell us more about that.
So TGVC is our first SPAC. We raised 115 million. We're very excited, even though the market is quite not very stable right now. But we've changed the strategy now. Instead of the high growth kind of like stories that people were looking for on Wall Street, we're now looking for more like private equity deals where there's real equity, real revenue, real profits, and actually companies that are in it for the long term. So the profit and sort of like vision of what investments to make is not changed. It's just maybe the flavor of the month has been changed a little bit, but ultimately the fundamentals of investing is still there. You still have to look for companies that make money, have the right founders, the right systems in place, and hopefully we can bring more value to investors and shareholders when we're able to de-SPAC.
And Patrick, when you look ahead, what are some ESG investments, interest trends that you're watching?
So ESG is very interesting. Obviously, over the last couple of years, has become more and more prevalent. We've always chosen to invest with these 3 things in mind anyway. It just so happens that now has become a lot more common. So we keep on going in this aspect. And as you said before, one of our missions is to provide positive impact and value to the world, to try to make the world a better place. And ESG is right in this sector. So one of the things that we're looking at is potentially setting up an ESG fund in London. And also a lot of the investors that we make that we try not to do harm, such as arms, gaming, alcohol, tobacco, things like this, we don't really touch. So ESG is something that's very important. Now, I want to emphasize that one of the interesting things for us, especially, is that what we find now is the ESG projects on offer actually are able to be profitable. Whereas I guess 5, 10, 15 years ago, ESG projects are things that people want to invest, but if they don't make money, then ultimately it will, repel investors.
All right, Patrick, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.